morning to everyone. I welcome you in this marathon session of Module A. Today we are going to cover this Module A, that is International Trading. So I am hoping that I am visible to everyone and I am audible to everyone. A very good evening, and I hope you all are fine and good. So today's is the day for the module A MCQs in this, and the a lots of concept with these MCQs. So let's get started with our questions. So kindly, if you are watching here, so give the answers in the comment box, whatever you feel about the question. So first question is, foreign exchange markets are basically four options are given: regional market, domestic markets, global market, and localized exchange traded markets. What is foreign exchange markets are? We know that here basically if we talk about the yes, very good, Anita ma'am, Mukesh sir. Foreign exchange markets are primarily global market because they facilitate the trading of currencies across the world. Okay, which basically connecting various financial centers and allowing participants to buy, sell, and exchange currencies regardless of their location. This global nature enables significant liquidity and 24-hour trading cycle. Okay. Yes, Pawan sir, very good. Now, what is the meaning of regional market? We know that the market that operates within a specific geographic area, that is called regional market. Domestic markets, these are the markets within a single country. And forex trading, if we talk about the forex trading, it involves multiple currencies from different types of currencies and making it more than just a domestic market. And global market, this is correct because the foreign exchange market operates a global scale, operates on a global scale, and allowing trading between currencies from various types of countries and allowing 24 into our trading cycle. So we can say our option C is correct here. This is global market. Always we can say foreign exchange markets are global markets. Next question. Foreign exchange does not include here. The four options are given: deposits payable in foreign currency, instruments drawn in foreign currency and payable in foreign currency, then instruments drawn in Indian rupees on a checking account of the drawer and payable abroad, then instrument drawn in Indian rupees on a current account of an Indian company and payable in India. So we have to tell foreign exchange that does not include. Yes, correct, correct. Anita ma'am, Pawan sir, Mukesh sir, correct. Mukesh sir, answer. Let's see the answer. See, foreign exchange basically does not include those instruments which is drawn in Indian rupees on a current account of an Indian company and payable in India. This option involves the transactions in the Indian rupees, which is a domestic currency, and foreign exchange typically involves those currency other than the domestic currency of a country. And we can say that the other options are here involving the foreign currencies or the transactions that are payable in the foreign currencies. So basically we can say that here option D is correct, which is instrument drawn in Indian rupees on a current account of an Indian company and payable in India. Yeah, it's okay. Okay, the answer is D here, option number D. Understood? Third question, very easy question. Out of the several factors, the following factors does not have an effect in the movement of exchange rates. The factors that does not affect in the movement of exchange rates. See, if we talk about that factor that does not have a significant effect on the movement of exchange rate is basically increase in yes, Pawan sir, Anita ma'am, Subodh sir, Mukesh sir, good. Increase in domestic tourism. Why? See, if we talk about the political instability, this can cause uncertainty and decrease investors' confidence, which leads to depreciation of the currency. But if we talk about in the increase in domestic interest rate, higher interest rate often attract the foreign capital, which leads to an appreciation of the currency as investors seeks better returns. If we talk about the changes in the taxation policy, changes in taxation can influence some type of economic growth, which basically includes the investor sentiment potentially, which affecting currency values. And if we talk about the increase in domestic tourism, while tourism can boost a country's economy, it does not directly impact exchange rates as significantly as the other factors. Increased tourism may lead to a temporary influx of foreign currency, but is not a primary driver of currency value changes. So that's why this is one of the factor that does not have effect in the movement of exchange rates. That is increase in domestic tourism. Okay. Moving to the next one. Yeah. Here spot dealing in FX. FX is the short form of Forex. Forex market. Okay. So spot dealing in Forex market, foreign exchange market, FX market means if we talk about here first the spot dealing. If we talk about here the spot dealing is what? Spot dealing in the foreign exchange basically refers to the immediate exchange of currencies typically settled within 2 business days from the transactions day or from the transaction date, and basically so we can say that spot dealing in the foreign exchange market means delivery of funds in is on the second working day from the date of deal. Okay, so in spot transactions basically currencies are exchanged for immediate delivery, which typically occurs 2 business days after the trade date. This is standard practice in the forex market with the exception of certain currency pairs such as we can say US dollars, which basically may settle in the next business day, that is T+1. So very good everyone. Here Anita ma'am, Mukesh sir, Pawan sir and Subodh sir. Answer is here option B. B option is correct for this. Okay. The rate at which the quoting bank is ready to sell the currency is called. The rate at which the quoting bank is ready to sell the currency is called bid rate, offer rate, TT buying rate, swap rate. Yeah, very good everyone. And tamam Subodh sir, Mukesh sir, answer is B. How? The rate at which the quoting bank is ready to sell the currency is called the quote rate. Now, can you please tell me what is the meaning of bid rate? Bid rate, this is the rate at which the bank is willing to buy a currency. Okay. and it is the price you would receive when selling the currency to the bank. If we talk about the offer rate, this is also called the ask rate. Okay, and this is that rate at which the bank is willing to sell a currency, and it is the price you would pay to buy the currency from the bank. And here TT buying rate is basically refers to the telegraphic transfer buying rate, which is the rate for transferring funds electronically, and it usually applies to buying some foreign currency. And if we talk about the swap rate, this refers to the rate which is used in the currency swap agreement, where two parties exchange currencies and agree to swap back at a future date. So basically here the correct answer is offer rate. Okay. The rate at which the quoting bank is ready to sell the currency is called offer rate. Moving to the next one. Operational risk does not include which one of the following? And we know that what is the meaning of operational risk? It basically refers to the potential for the losses which results from inadequate or failed internal processes. Sometimes failure in human systems or external events can be considered. It encompasses a wide range of risks that can impact our organization's operations. So yeah, everyone is correct here. Anita ma'am, Mukesh sir, Pawan sir, Pankaj sir, Subodh sir. See, here the answer is movement in exchange rates, because this is not included to any internal factor and also some external factor, but human errors, technical fault, systematic fault, we can say these are all related to some organization's failure. So the correct answer is here option A, that is movement in exchange rates. Okay. Cancellation of forward contract is to be done at cancellation of forward contract is to be done at. See, if we talk about here opposite bill rate, generally it pertains to the trade finance instrument basically, and may not be relevant for the few forward contracts. If we talk about here opposite cash rate, basically when a forward contract is cancelled, it is typically settled at the spot rate or current cash rate, and the currency pair is involved. Basically we can say that this allows the parties to neutralize the original contract by entering into a new transaction at the current market price. Why C? I think C is not correct here. The correct option is opposite cash rate. Yes, the correct answer is here opposite cash rate, because if we talk about the TT rate, basically this relates to the telegraphic transfer. Telegraphic transfer rates for electronic currency transfers, but is not the typical rate which is used for the cancellations. So here the correct answer is B, opposite cash rate. And D is the possibility is D is not here, because this refers to the traveler's check rate, which are not applicable to forward contracts. So the correct choice is here opposite cash rate. Okay. Now crystallization of export bill is to be done. Crystallization of export bill is to be done See, crystallization of export bills. It is that process where bank transfers the exchange rate risk back to the exporter. This basically, we can say that, happens before the due date of the bill to mitigate potential losses due to currency fluctuations. And if we talk about the specific time of crystallization, it can vary depending on the bank's policy and the type of export bill. However, it is generally done well in the advance of the due date to ensure timely risk management. So we can say that here the correct answer is option B, that is before the due date. Crystallization of export bills is to be done before the due date. Understood? If you liking this session, kindly give the like to the video. Yeah. Next question, I think next unit is started from here. Which of the following is an FATF compliant country? Which of the following is an FATF compliant country? See, whatever the options are given here, Iran, North Korea, Pakistan, none of the above. Among the options provided, we can say that Pakistan has made efforts to comply with Financial Action Task Force, that is FATF standards. Basically, although it faces challenges and some type of scrutiny. Iran and North Korea are not FATF compliant and have faced significant sanctions related to their compliance failures. Therefore, we can say that the most accurate answer is here Pakistan. Okay. Form 1 refers to. See, what is the meaning of Form 1? Let's see first. Form 1 basically specially designed for outward remittances that basically do not relate to imports. And these includes a variety of transactions such as payments for services, investments, donations, and also payments for the educational purposes, and also some other permissible transactions, but according to the FEMA. And Form 1, if we talk about, it refers to the control from for outward remittances other than imports under the FEMA. This form is used for various types of outbound remittances that do not pertain to imports. So we can say that here the correct answer is control from for outward remittances, basically other than imports. That is option B. Sorry, option D here. Correct option is D. I'm hoping that everyone is liking the session. Like, you can do comments if you are liking that, it's okay, it's good, or it's not good. Whatever you feel, you can share. Exam is coming, so yeah, we have to clear this exam. So, which of the following is not a permissible purpose for grant of loans via resident to a NRI? इनमें से कौन सा परमिशेबल पर्पस नहीं है लोन्स को ग्रांट करने के लिए रेजिडेंट के थ्रू NRI को? So 4 options are given here: investment in agriculture and plantation activities, real estate business activities which is undertaken by the NRI in India. Very good, Pawan sir, Subodh sir, Anita ma'am and Pankaj sir. The answer is here both, because both investment and in agricultural and plantation activities and the real estate business activities undertaken by the NRI in India are not permissible purposes for grants of loans by our resident to an NRI. So the correct answer is option C, that is A and B both. Now, the resident individuals having invested in the overseas subsidiary should be allotted shares within a maximum period of, what is the maximum period? Yeah. See, according to the RBI guidelines, according to the RBI guidelines, a resident individual who has invested in an overseas subsidiary must be allotted shares basically with a maximum period of 180 days from the date of receipt of the inward remittance or the date of debit to the NRE, FCNRE B accounts. If the shares are not allotted within this time frame, the amount remitted must be refunded to the investor. So the correct answer is here 180 days. So basically NRE is non-resident external and FCNRB is basically foreign currency non-resident accounts. These are the types of the bank's account specifically designed for the NRIs, that is non-resident Indians, to manage their foreign income and investments. So the correct answer is here option B. Okay, what is the permissible ceiling for a resident individual making investment made under LRS out of balances in the RFC accounts? Read carefully, here talking about the RFC accounts. See, under the LRS, the general permissible limit for an individual to remit money abroad is US dollar 2,50,000 per financial year for the various purposes, like it can include the investment, education, travel, etc. But if we talk about the RFC, in the case of RFC accounts, these are the special accounts that allow Indian residents to hold foreign currency, and they can be used to manage funds from abroad such as income earned in foreign countries or gifts. So basically, LRS is that framework which is established by the RBI that allows the resident individuals to remit money abroad for various types of purposes. So if we talk about permissible ceiling in the case of RFC account is US dollar 5 million in a financial year, and the higher this higher limit recognizes that RFC accounts are designed for those individuals who have foreign exchange and they want to invest those funds abroad without the restrictions and some other form of remittances. That's why here the answer is US dollar 5 million is correct here. Basically, if in some words I want to say something like US dollar 5 million limit for the investment from the RFC account under the LRS provides significant flexibility for residents to invest abroad. And basically, it reflects the RBI's recognition of the unique nature of RFC funds. Okay, understood? Moving to the next one. Correspondent banking does not include here. Basically, correspondent banking is that banking arrangement where two banks typically located in different countries which agree to provide banking services to each other customers. And while it includes services like account maintenance, authentication, and also we can say here uh, collection of checks of bills, it does not involve opening a branch on behalf of the bank. Correct. So here the option B is correct, opening of branch on behalf of a bank. Okay. Next, Loro account. What is Loro account here? Loro account statement is their account with a third bank. And if we talk about the Loro, Loro stands, it comes from the word Spanish word, and it refers to the account held by the bank with bank A, basically with bank B, for a benefit of third bank, that is bank C. So here the correct answer is their account with the third bank. Okay, very good everyone, you were giving answers here. Good. Swift. Swift is a car. If we talk about Swift, Swift is a car and there are so many models are there in the Swift. But here we are talking about Swift is a messaging system basically. So what is Swift? It is a system to transmit financial messages between banks globally. And if we talk about what is the full form of Swift, it is Society for Worldwide Interbank Financial Telecommunication. It is a network basically that enables banks and financial institutions worldwide to send and receive information about financial transactions in a secure, standardized, and reliable environment. So the correct answer is here, system to transmit financial messages between banks globally. Question next, as per FEMA. As per FEMA, a non-resident is as per FEMA, a non-resident is see, as per FEMA, if we talk about under FEMA, a non-resident typically defined as those individuals who resides outside India for a specified duration. Basically, we can say usually not residing in India for more than 182 days during the preceding financial year, or not residing for more than 60 days in the current financial year, and 365 days in the last 4 years combined. So basically here non-resident here, a person who is working in Dubai for last 3 years. I think this option is correct here, because they have been residing outside India. So that in that case the person will be the non-resident. So why the answer D is correct here. A student who is visit on Australia's tour, that is the Indian resident, because he is already doing the MBA at IIM Indore. So basically here the asking who is non-resident. So according to the things, whatever the things like 182 days, not more than not residing in 182 days, a person who is already in Dubai for the last 3 years, so that person can be here non-resident. According to me, the option A is correct here. Yes, the person residing above 180 days. Option A is correct. Now, here, an NRI cannot open following accounts in India. An NRI cannot open following accounts in India. See, here the written cannot open. If we talk about here, an NRI cannot open the following accounts in the India is basically Australia FCNR deposits in the Australian dollars for a period. Here the correct answer is an NRI term deposit for a period of 5 years. Yes. Here the correct answer is option D, that is an NRI term deposit for a period of 5 years. If we talk about the FCNR deposit, these are the foreign currencies accounts that can be held in certain designated currencies, and the minimum tenure for FCNR deposit is typically 1 year, and they can be maintained up to 5 years. And FCNR deposit is basically is for only 2 years is permissible. Okay. Then here you have to tell the condition whether the following person can open NRI account with banks in India or not. First one, a person of Indian origin who is staying in Japan for last 3 months and is employed by US firm dealing in computer software. So this person can open the NRI account or not? Basically, if we talk about this person cannot open the NRE account because this person is an Indian origin and he is staying for the in the Japan for the 3 months, and this is not fulfilling the limit, so basically this is not able. Then second one, a lady of US origin whose husband is of Indian origin and is settled in France for the last 5 years and runs a restaurant in France. This lady is basically, we can say, she can open an NRI account as long as she qualifies as a spouse of an Indian citizen and is not residing abroad. And other three can't open because they gone outside out of India just because of some work or to attend a conference, so they are not become NRIs. So here basically option B is correct. Understood? Are you all able to understood what I am trying to say? Kindly do the comment yes or not, so it will help me to understand as well. Yes, Pawan sir, I've seen are to be open for more than 1 year, and up to max 5 years. Correct. Now choose the correct. All modules marathon will come on every weekend, which helps you obviously, and also some types of more question that can become in the modules that will be included. Okay, so choose the correct from here. Which one is correct? Yes, basically if we talk about the LC is letter of credit, and here four options are given. If we analyze, LC must have an applicant and a beneficiary. This is correct because an LC is established between the applicant and the beneficiary, that is the seller. And second option is not correct because while an LC involve both advising and confirming banks, it is not mandatory for LCs to have both. An LC can exist with just an issuing bank and the beneficiary. And third and fourth is completely incorrect here. So option A is correct. Next, irrevocable LCs cannot be revoked. Which one is correct here? See, in the first case, this is incorrect because an irrevocable LC cannot be revoked or cancelled, but any amendment generally requires the agreement of all parties involved. If we talk about the second one, basically red clause LC is called so because it is over printed in red letters. This is incorrect because the term red clause does not refer to the color of the text. It signifies that the LC allows the beneficiary to receive an advance payment before the shipping. And if we talk about the third option, LC is confirmed by a bank usually in the country of the exporter for giving additional comfort to the exporter. Correct, because a confirmed LC provides an additional guarantee to the exporter by adding the confirmation of a second bank often located in the exporter's country. That means this option is correct. Option C is correct here. Okay. Back-to-back LCs is back-to-back LC. If we talk about back-to-back LC, back-to-back letter of credit involve on that LCs being opened based on another LC. Typically, an exporter uses an export LC which is received from a buyer to open a second LC in favor of a supplier. So basically we can say that here the correct option is option C. This is C. Okay. Basically the correct choice is C, LC opened on the backing of an export LC. Because this allows the exporters to facilitate the purchase of goods and service from a supplier to fulfill the terms of original export LC. Okay. Now UCPDC 600 is uniform, sometimes full forms can be asked, customs and practice for documentary credits. Basically, it is a set of rules developed by the ICC International Chamber of Commerce that governs letter of credit which is used in international trade. And if we talk about UCP 600 is the latest version of these rules which provide the guidelines for the use and implementation of documentary credits. So the correct answer is set of rules which is framed by the ICC governing LC's business globally. Okay. Now, ICC is basically ICC. ICC is International Chamber of Commerce, and it is a global organization that provides rules and guidelines for various aspects of international trades, which includes the UCPDC also. And in this, basically we can say that it is not the issuer of the LC, nor it is a trade body which is specified by the Indian exporters, and it does not act as a confirming bank. Very good, everyone. So basically here the correct answer, we can say that ICC is here the trade body governing the UCPDC rules. Okay. Why D? Answer is ICC is already a body which governs which provides the rules and guidelines included in ICC. UCPDC is also included. So this is the trading body that govern the UCPDC rules. Okay. Now, in a LC transaction, following parties are not involved. In a letter of credit transaction, which party is not involved? Following parties are not involved. See, exporter, if we talk about the exporter, the party is involved as the beneficiary of the LC. If we talk about the issuing bank, this is the bank that issues the letter of credit on behalf of the buyer. The advising bank, this bank advises the beneficiary of the LC, which confirming the authenticity. But if we talk about the option D, the opening banks basically refers to the representative in the beneficiary country who helps basically who helps here source business for the issuing bank. So this is the party that is not involved in the LC transaction. Exporter is included in the LC because this party is involved as the beneficiary of the LC. Okay. Basically, this suppose he is the Jinping, China's president, and this is our country's president. Now they are exporting and importing something. Like Jinping is saying to the Modi ji that you have give me that thing, I will pay you. But Modi ji is saying give money first. They both don't have trust on each other. So what will they do? They will go to their banks. Now these two banks will do work on behalf of Jinping and Modi ji. Okay. So this is basically that Jinping is basically exporter or the beneficiary, and this Modi ji is basically buyer. Okay, and they have the issuing bank, and Jinping have their advising bank. Understood? Now, bill of entry is required to show that Bill of entry is required to show that bill of entry basically is a legal document which is filled by the importers to or their agents when goods are brought into a country. It serves as a declaration of the details of the goods, which includes their nature, quantity, and value, and is necessary for custom clearance. So, if we talk about that goods, the goods that have come into the country of import, that requires bill of entry. Okay. Great, Pawan sir, Mukesh sir, and those who are giving answers. Very good, everyone. Anita ma'am, Pawan sir, Sheikh sir. Here you can see the answer is correct, which is C. Okay. The Incoterms, which confirms that the price of the goods is inclusive of insurance and freight up to the port of destination, is called. See, CNF is basically cost and freight, which basically does not include insurance. Then CIF, that is cost, insurance, and freight, means the seller pays for the cost of the goods, the insurance, and the freights necessary to bring the goods to the port of destination. CPT is basically carriage paid to, and CFI is not a recognized Incoterm. So here the correct answer is CIF. Okay, very good, Anita ma'am and Mukesh sir, Subodh sir. CIF is the correct answer. Now moving to the next one, IEC number. Why IEC number is required? If we talk about the IEC number, why it is required? IEC is that number that is import export code. IEC is import export code. It is a unique 10-digit code which is basically issued by DGFT. DGFT is basically Directorate General of Foreign Trade in India, and it is mandatory for anyone who wants to engage in import or export activities. While it may be involved in the filling of a bill of entry or some related custom procedures, the primary requirement of an IEC number is to facilitate export and import transactions. So we can say that the correct answer is here, undertaking only export or import transaction. It is required. Okay. Understood? Next, banks cannot allow export credit for banks cannot allow export credit for if we talk about export credit is meaning the financing which is provided by the banks to export to facilitate their exports also. It typically include packing credit, post shipment credit, and other forms of financial support. And if we talk about the permissible transactions, export credit is generally allowed for various types of supplies, which includes special economic zones, supplies for exports, even if the exporter sells some products in the domestic markets. So here basically banks cannot allow export credit for supplies to a manufacturer in India who makes import substitute spare for machineries. Here the correct answer is D. Correct answer is D here. Okay. Why everyone is giving the wrong answers? D answer is correct here. An export, next, move to the next. An export to a state electricity board covering supply of transmission towers under a World Bank financed project will be called here. What is the correct answer here? Tell me what you are feeling that according to you which answer is correct here. Great. Now, if I am telling that an export to the state electricity board covering supply of transmission towers under a World Bank financed project, here, due to this we can say this is a global export, because that is the World Bank financed project. So we can say the correct answer is here option A, that is global export. Clearly this answer is correct. According to me, this is the correct answer. Okay. Now, export credit in foreign currency can be presently allowed to exporters in India at a maximum interest of, see, we can say if it is a deemed export, this refers, basically deemed export is what? It is refers to the transaction in which goods supplied do not leave the country but considered as exports for the purpose of certain benefits. So basically deemed export is not correctly matched here. Export credit in foreign currency can presently allowed to exporters in India at a maximum interest rate of, see, the maximum interest rate for export credit in foreign currency is typically linked to the LIBOR, that is London Interbank Offered Rate, with an additional spread which can vary based on the current regulations and the guidelines which is set by the RBI and other financial authorities. We can say here the correct answer is here LIBOR plus 350 plus. Why our answer A is correct? According to A or B, A or C? Answer C is correct. Let me check this. I'm not sure in this. This is 250 or 350. This thing is swapping from my mind. Just take. We are taking this in on hold. We will check and I will tell you shortly. Okay. Next, moving to the next, that is PCL, packing credit loan. What is packing credit loan? Basically, we talk about the PCL is a short term finance options, which is basically provided to the exporters so they can meet their working capital needs for producing and packing goods meant for export. These are typically linked to the export activities. They can indeed be provided to local manufacturers supplying goods for export. So basically, which option is correct here? PCL can be allowed to local manufacturer for supply of goods of exports because these are short-term finance options which is provided to exporters to meet the working capital needs for producing and packing goods meant for export. Yeah, answer B is correct here. Now, also tell me this. An authorized dealer bank branch needs to submit to RBI dash statement on half yearly basis, showing details of import bills where evidence of import has been submitted within the stipulated time. What is the correct answer is here? Is BF, XOS, ATX? See, if we talk about XOS, it is typically relates to exchange transactions, but not specifically for importing the bills. But if we talk about the BEF statement on a half yearly basis, it shows the details for import bills where evidence of import had been submitted within the stipulated type, and it is also mentioned on the RBI's website. If we check this question on, if we check this data on the RBI's website, they also shows that BEF, Banking External Fund, is the correct answer for this, because this is the statement on a half yearly basis which basically shows the details of import bills where evidence of import has been submitted within a stipulated time. So here we can say correct answer is BF. Understood? Now let's talk about EEFC accounts. EEFC accounts can be maintained EEFC accounts basically exchange earners foreign currencies accounts that are specifically designed for the exporters to retain portion of their foreign currency earnings, and these accounts allow exporters to manage their foreign currency earnings and use them for eligible payments in foreign currency. So if we talk about the EEFC accounts, basically here by receivers of inward remittances by way of export proceeds. It includes the option D. Option D is correct here. Okay. Now, and financing agreement where the transaction is financed by the financial institution in the exporter's country or any third country based on the arrangements made by the importers or his bank is called If we talk about the buyer's credit, it refers to the financing arrangement where a financial institution in the exporter's country or a third country provides credit to the importer, which is often facilitated by the importer's bank. This allows the importers to finance the purchase of goods from the exporters. Okay, so here the correct answer is a transaction of buyer's credit. Okay, a transaction of buyer's credit. And if we talk about the documentary credit, it refers to the use of letter of credit, which is a different finance mechanism. Correct answer is option C, that is a transactions of buyer's credit. As per the extent of FEDAI guidelines, crystallization of export bills purchased discounted is to be done under. See, the crystallization process for the export bills can vary based on the policies of the individuals banks and specific arrangements made with the customers, and this flexibility allows banks to tailor their processes according to the needs of their clients and the specifics of the transactions. So if we talk about here, as per extent FDI guidelines, crystallization of export bills purchase discounted is to be done as prescribed by each bank as per the arrangements between the basically banks and the customers. Okay. Factoring is defined as, what is factoring? This is the agreement basically between the financial institution and the exporter for purchase of the later book debts and control the credit extended to the importers. Yeah, so here the correct answer is option C. Agreement between the financial institution and the exporter for basically book debt and controls the credits here. Okay, option C is correct here. Now tell me which among the following is not a recognized leader under ECBs. ECBs, external commercial borrowings. ECBs are here external commercial borrowings. External commercial borrowings, these are the loans which is made by the non-resident lenders to Indian borrowers, which can include various entities, these recognized entities that can lend under the ECB framework is including the ADBs, International Financial Corporations, and basically we can say the Exim Bank of India. Okay. So if we talk about here, which among the following is not recognized as the leader under ECBs, that is Exim Bank of India, Export Import Bank of India. Because Export Import Bank of India, it provides the financial assistance for international trades. So we can say this is the correct answer. Understood? Moving to the next, which of the following is entity is not an eligible borrower for raising ECBs? If we talk about the guidelines for ECBs in India, only certain entities are eligible to raise funds. And these typically includes companies as defined under the Companies Act, and also we can say that basically here if we talk about registered partnership firm and sole proprietorship firm, these are not eligible borrower for raising the ECBs. Okay, so the correct answer is here option D. A and B both are not included. Understood? Now, Form ECB2 is a yearly return, quarterly return, fortnightly return and or monthly return. Form ECB2, if it is used to, this is that report which is used to report the actual transactions of ECBs under the Foreign Exchange Management Act, and this return needs to be submitted in 7 working days through the designated authorized dealer to the Reserve Bank of India. So the correct answer is option D, that is monthly return. This is the monthly return. Very good everyone who are giving the answers. Which one of the following sectors are prohibited to receive the FDIs into their equity? See, if we talk about certain segments of the railway may allow for FDI, but FDI in railway infrastructure like construction of railway tracks and stations is restricted. So it is, we can say directly the answer is railway. These this sector is prohibited to receive FDI into their equity. Understood? Firms portal. Firms portal, foreign investment reporting and management system. This is designed to streamline the regulatory reporting process for FDI, and it enables companies to comply with reporting requirements which is related to the FDI and provides a platform for submitting necessary documentation to the RBI and also other regulatory authorities. So basically, if we talk about the correct answer in this, Firms portal is facilitating refund of remittances under the FDI. Understood? No, there is some mistake. Let me check. Firms is basically, here the answer is facilitating regulatory reporting under the FDI. A option is correct. Correct, Anita ma'am, correct. Yes. A is the correct answer. Facilitating regulatory reporting under FDI. It's my mistake. Not C, it's A, correct. Thank you so much. A answer is correct here. Now, next question. FCGPR refers to? FCGPR refers to here. FCGPR is a reporting form which is used by the Indian companies to report the receipt of FDI in the form of equity shares, and also it provides details about the inflow of foreign currency into the company and is submitted to the RBI. So the correct answer is foreign currency gross provisional returns. Okay. Now, what is risk? Here, what is risk? Risk related to the unplanned event with financial consequences which results in the loss. Why, dear Anita ma'am? A certain event which outcome is known, that is risk. Risks are always uncertain, na? So we have to see the correct answer is according to this option C, because unplanned event risk is basically, we can say, refers to the possibility of the unplanned event that can occur and could lead to financial loss or also some negative consequences. Yeah, so correct answer is C here. Country risk. Country risk is when the basically current country risk is refers to the potential for the government to impose restrictions or actions that affect a buyer or borrower's ability to meet their financial commitments. This can include some actions like currency inconvertibility or legal restrictions. So basically, we can say that when the buyer or borrower is forbidden by the government to honor his commitment is generally refers to country risk. Great. Pawan sir, Anita ma'am, Mukesh sir, correct. Option A is correct. Operational risk does not occur. Operational risk does not occur. Operational risk, I already told you, it refers to the risk which arises from the internal processes, internal failures, and it encompasses risk like system failure, fraud, or operational disruptions. So basically, if the delay is there in the from the side of payment from the side of the buyers, this can we can say that this is the basically we can say that here option D is correct. Because strike at the port, non-loading of goods due to the rains, and delay in supplies by the sub-suppliers, all are pertain to operational aspect because they can impact the supply chain or delivery process, making them relevant to the operational risk. That's why these are not included in operational risk in any aspect. But payment from the buyer is not a case of operational risk. Okay. Next question, a standard ECGC policies do not cover. ECGC is basically Export Credit Guarantee Corporation, which basically provides insurance support to exporters against various risks which is associated with international trades. So if we talk about here, basically standard ECGC policies which do not cover is exchange fluctuation risk because it is totally related to the foreign exchange. Yes, Vikram sir, the correct answer is option A. Pavan sir, Anita ma'am, very good. Option is exchange fluctuation risk. Now, exchange fluctuation risk of ECGC is how much it covers. It basically provides coverage for fluctuation risk also that exporters may face, particularly when dealing with foreign currency transactions. Basically, it covers on above 2% and up to 35%. Option D is correct here. Covers exchange fluctuation above 2% and up to 35% only. Okay. General policies of ECGC do not cover. General policies. Basically, we talk about the coverage, primarily coverage for the credit risk, which is related to the non-payment by the buyers, insolvency, and some political risk. However, commercial disputes which may arise from the disagreements over contract terms and over the quality of goods are generally not covered under ECGC policies. So we can say that commercial disputes are not covered by the ECGC's policy. Option A is correct here. Understood? Next, the guarantees which is given by the ECGC to cover loss on advances for incentives which is received by the exporters at pre-shipment stage is called basically PCL. What is the meaning of PCL? Packing Credit Guarantee, which is specially designed to provide coverage for loans advanced to exporters for pre-shipment activities. This also includes financing for the purchase of raw material and production cost before the goods are shipped. So the correct answer is here PCL, Packing Credit Guarantee. Yes, correct. B option is correct here. Good, Vikram sir. Now, which one of the following is basically not a permissible activity of an IBU in a gift city? Just give me a minute. These are the true and false. Let's attempt also this true and false. Okay. These questions are based on true and false. Okay. First one is Exim Bank was established under Companies Act 1956 to promote financing of LC bills financing in India. True or false? Tell me fast. Is this statement is true or false? According to me, Exim Banks was established under Companies Act 1956 to promote financing LC bills. This is false because Exim Bank was established under Export-Import Bank of India's Act in 1981, not the Companies Act, and it focuses on providing financial assistance for export and import activities. This is false. Next, Exim Bank extends lines of credits to foreign governments to promote exports from India. True or false? We are on second one. Exim Bank extends lines of credit to foreign governments to promote exports from India. Basically, Exim Bank provides lines of credit to foreign. Why? Because Exim Banks are providing the lines for credit to foreign governments to promote the exports from India. This is true. Why incorrect? Exim Banks extends the lines. This statement is true. Now, Exim Bank is the nodal agency for Export Marketing Fund of Government of India. Exim Bank is the nodal agency for Export Marketing Fund of Government of India. Is this correct or incorrect? Yeah, true. Exim Bank act as the nodal agency for Exporting Marketing Fund, which supports the marketing of Indian products and services abroad. replaced the Defense of India rules. Next, here, Indian products and services, basically, if we yes, this one, Indian residents can draw exchange up to the limits prescribed for visit to Nepal. True or false? Indian residents can draw exchange up to the limits prescribed for visit to Nepal. True or false? See, this is true. Why true? Because Indian residents are allowed to draw foreign exchange for travel to Nepal within a specified limit set by Reserve Bank of India. True. Vikram sir and Mukesh sir, this statement is true. See, while visiting abroad to Europe, Indian resident can spend exchange up to the eligibility by using an international credit card. Yes, Indian resident can use international credit cards while traveling abroad, but the spending is subject to the limits which is prescribed by the LRS. So this statement is also true. Now, investment abroad via trust registered under Charitable Trust Act is allowed up to $5 million per year. If we talk about the liberalized remittance scheme, trusts registered under the Charitable Act are permitted to invest abroad within a specified limit of $5 million per financial year. This is true. Resident Indians can park their surplus foreign currency balances and left out over after return from abroad in the RFCD with a bank in India. True or false? If we talk about the resident Indians, they can maintain their RFCD accounts in India to hold foreign currency balances they bring back to abroad. They bring back from the abroad. So basically, this statement is also true. Now, corporate here, as per the FEDI guidelines, forward contracts booked by the exporters need to be cancelled on the 7th working day from the due date if not picked up within the delivery period. If we talk about the FEDA guidelines, if a forward contract is not picked up within the delivery period, the cancellation typically occurs on the 10th day from the due date, not the 7th. This statement is also false. Now, corporates can raise funds through ECB for any amount within the tenor or pricing left to the discretion of the borrower and the lender. See, if we talk about corporates can raise funds through ECBs, there are regulatory limits on the amount that can be borrowed, as well as stipulations regarding the tenor and pricing set by the RBI. Basically, we can say this is the statement correct. Now, ADRs can be registered in the USA and Exchange Commission. Yes, because these are the American depository receipts that can be registered in the USA and regulated by the Securities and Exchange Commission. So, this is the true statement. Next, GDR's depository receipt can basically here can be converted into shares that it represents. Yes, GDRs represent shares of foreign company and they can be converted into the underlying as shares which is based on the terms of the GDR issues. This statement is also true. Now I think 3 or 4 questions are also left. Let them complete too. Which of the following is not a permissible activity of an IBU in the gift city? IBU is International Banking Unit. If we talk about the IBUs are primarily designed to cater to non-resident customers and foreign entities, basically, which is focusing on foreign currency transactions and offshore banking activities. They are also not allowed to open any saving account for resident individuals or high net worth individuals in India. So basically, we can say option A is correct. They are allowed to open saving bank account for resident individuals and HNI customers. Which of the following statement are incorrect in respect of resident individuals which are investing under the LRS? See, here the answer is correct. Investment that can be in securities which is issued by the corporates resident in India. Basically, under the LRS, just give me a minute. Yeah, under the LRS, resident individuals are generally not allowed to invest in securities issued by the Indian residents, focusing instead of investment in foreign assets. Okay, so that's why this is the incorrect statement. Now, International Financial Services Centers Authority is if we talk about International Financial Services Security, it is a statutory authority which is established by the Government of India. Okay. Which of the following is not a limitation for the banks to adopt aggressive technology? See, here if we talk about creating awareness among customers because of the widespread reach is not a limitation for the big banks to adopt aggressive technology. So option B is correct here. These are the questions which are not including the concept. These are the direct things. That's why the speed is fast. Which among the following is the ultimate and topmost objective of any bank in introducing robust digital technology? Basically, here the correct answer is ensuring value addition to the customers. This is the best for the ultimate and topmost objective of any bank which introduce robust digital technology. Now, the foreign exchange rate portal under the digitalized dealing room environment provides to the corporate all of the following facilities and except if we talk about in this, basically we can say the option D is correct here because this is here exchange of deal slips and settlement and reconciliation of foreign exchange transaction is not included. which of the following are the key benefits that could be experienced to the corporate exploring usage of digital trade portal? This is C, this is D. They are interchanged. See, if we talk about here, the key benefits, bulk upload facility of all the trade transactions is this features enhances the efficiency by allowing corporate to process multiple transactions simultaneously, and also we can say approval of the transaction by the corporate online through maker here maker checker facility. This is also correct. All of the correct answer is there, correct, all of the above. Okay, all of the correct is there. Artificial intelligence is the most prominently used in all of the following areas except. Artificial intelligence is most prominently used in all of the following areas except. Yes, see, AI can enhance security and efficiency in fund transfers. The core process of transferring funds is typically more straightforward and less reliant on AI compared to the areas like mobile banking, customer relationship management, and handling the customer complaints, where AI plays a significant role in personalization, automation, and support. So here this is not allowed for the fund transfers. So option B is correct here. And the last question is for today. The system for recording information in a way that makes it difficult or near to impossible to change, hack, or cheat the system is called blockchain system. See, what is the blockchain system? If we talk about the blockchain technology, it is designed to provide secure, transparent, and tamper-proof records, making it a reliable choice for various applications, which include cryptocurrencies and a secure transaction. So here the correct answer is option C. So thank you so much for giving me a lot of time today and for this session. I hope you like this session and all the important MCQs are covered in this. If anything is left to the questions, related to the questions, obviously we will cover before the exams, but we need consistency, we need like dailiness in this, a proper time for this. And yes, दिवाली की सफाई के साथ सेब की भी सफाई कर दीजिए, CAIIB की। इस दिवाली सब कुछ हमारे मतलब क्लियर वाली और सर्टिफाइड वाली होनी चाहिए. Thank you so much for attending today's class. We will meet surely in next class. Thank you and have a very good day. Thank you everyone.